Hey Dan, I hope you don't mind if I jump in here at this very late date. Came back across your talk on fiat money, and I'm going to put you in touch with my real view of it in a second. But uh, I think the two things that you said were the most critical about fiat money was the problems of greed and human nature, or something like that. Temptation, I guess, was human nature, and that there was some aspect of fiat money related to comparison to hard money, gold-based money. That you found, that was the problem with it, and you gave some examples. Your friend gave some examples, and you kept saying something about uh, given 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 the power of those who have uh, uh, that want to protect what they have. Uh, it's a problem having a fiat money system. That there was some problem related to the fiat money system, um, and and I think you're just using the term fiat. That it's not tied to. I think you must be using it not tied to any amount of gold. So I guess my distinction between the fiat money and the non-fiat money, okay, is whether it just derives its value by the basis of whether the government says that's what it's worth, okay, and therefore it's the government's relationship to the money system that's the fiat nature of it, more than anything, and government says what it's valued at. It's valued at $1. It just so happens. So I think the question that I have is um, why you think why you might think that given human nature, you said you didn't really prefer one or the other, and I prefer one or the other. So I'm trying to understand why. Maybe you don't, for professional reasons, because you are a trader. You can't say too much, too good, or too bad about one thing over the other. You deal in commodities, so you have to have a neutral book, so to speak. Um, my way of thinking of it is we have the potential to have control over the amount of money that's created. We have that potential. Not that we do it, or that we do it very well, but we have the potential to do it. Um, I think when you take a look at the money creation, like I think over the last 10 years, been something like, if you take the whole banking system, not just commercial banks, but 10% a year on average, or something like that. Can you imagine? We should be. Seems like we should have been providing for an economy growing at 2 or 3%, yet the money was growing at 10%. 10%. What, that doubles in 7 years, doesn't it? So double the money supply in 7 years. Uh, all of that was the result of the Federal Reserve banking system, and that's just my opinion. I know. I mean, that's not just my opinion. To me, that's the legal basis for it. Okay, legal, factual, economic basis for it. Why? Well, because the Federal Reserve banking system, its board of governors, etc., are the ones that are charged with managing the economy of the United States of America, and especially the money supply. I should say, managing the money supply so as to control and manage the economy of the United States of America. So, if it was wrong to grow the money supply by 10% a year and to double the money supply in 7 or 8 years, it's the Federal Reserve's job to know that it's a problem and to prevent it from happening. And the way that you do that, I mean, they could say that they do that by by setting short-term interest rates or setting federal fund rate or some gibberish like that about how that actually controls the money supply, which clearly it doesn't. But they didn't do anything in it. So what did they do? Actually, they did the opposite. They praised the innovation that caused the money supply to grow. That's both Greenspan and Bernanke. So the fractional reserve bankers, Federal Reserve bankers of the fractional reserve debt money system, are the ones that caused the creation. So are those the people that you worried about? I mean, are you worried about the government when you talk about the problems of fiat money? Whether you see the government and the bankers, as partners, equally benefiting and causing all the problems on the people. Well, that's kind of my issue. I'm going to say that. To me, we have the possibility of controlling the money supply. I don't know what that would do for you traders, because I'm not a trader and I don't have any money to trade, so I'm just looking at it in terms of monetary policy. You mentioned in your talk about when economists say don't go there, pay attention to that, don't look behind that door. That's my take on that is that's the description of what happens to students in economics when it comes to monetary reform, when it comes to what's the money system all about, how does the money system work, where does it derive its authority, its history, its purpose, its method. How come fractional reserve banking makes sense? Are you allowed to ask that question? Creating more debt, always creating more interest, obligations greater than the debt, always taking more money out of the economy to make the debt service payments so that you might end up like Latvia or Iceland or Ireland or wherever, by the way. And if you take the big picture, and the big picture is the United States dollar, remember, being the base currency, the standard currency for basically all of the world's economy. When you take that, meaning that in order for that to happen, there has to be a lot of it in the hands of the central bankers of the other countries so that they can prove that they have the currency on which the economy is based. Anyway, it's just my take. Wonder what you think about it. I'm going to ask you to take a look at www.economicstability.org. Maybe I've not done that already. And click on the primer and click on my thing about the money system comment, because I'm of the view without a monetary transformation, we're not going to work our way out of this hole. The amount of money coming out of producing real economic goods is going to grow and grow and grow over the time of trying to pay back those trillions of dollars. And the funny thing is that I don't know, maybe you trade it. So, with all due respect, it'd be nice to get back to me. Thanks.